Hi everyone. Today we are going to see about the final accounts of the company. The final accounts of the company classified into two: profit and loss account and balance sheet. Profit and loss account. The profit and loss account is a statement. Financial statement shows that the revenues, cost and expenses incurred during a specific period, usually a 1 year. Balance sheet is a statement of financial positions or statement of financial conditions. The balance sheet is based on the fundamental equation assets equal to liability plus equity. Schedule 3 Companies Act 2013 General instructions for preparing the balance sheet, profit and loss account. The disclosure requirements specified in this schedule are in addition to and not in substitutions of the disclosure requirement specified in the accounting standard. Additional disclosures specified in the accounting standard shall be made in the notes of accounts or by the way of additional statement unless required to be disclosure on the face of financial statements. Each items on the face of balance sheet and statement of profit and loss account shall be cross-referenced to any related information in the notes of accounts. Depending upon the turnover of the company, the figures appearing in the financial statement may be rounded off as given below. Less than 100 crores rupees to the nearest 100,000 lakhs or million or decimal thereof. 100 crores rupees or more to be nearest lakhs, million, crores and decimals thereof. Once a unit measured is used, it shall be used uniformly in the financial statement. Except in the case of first financial statement laid before the companies after incorporation, the corresponding amount comparatives for the immediately preceding report period for all times shown in the financial statement including notes shall also be given. Let us see format of balance sheet. The balance sheet majorly classified into two: equity and liability side. Another one is asset side. Equity and liability side. First one shareholders fund. Under that share capital. The share capital only we want right authorized share capital, issued share capital, subscribed share capital, paid up share capital. From this calls in arrear should be minus. The calls in advance and the forfeiture and reuse of shares are shown in the heading of share capital. The next heading reserves and surplus. In the reserves and surplus we want to write all the reserves including current year net profit. Money received against share warrant. Share application money pending allotment. Third heading is non-current liabilities. The first one is long-term borrowings like debentures, deferred tax liabilities, other long-term liabilities, long-term provisions. The next heading is current liability. In the current liability, first heading is short-term borrowings, trade payable, other current liability, short-term provisions. This total will be called as the liability side total. In the asset side, it will be classified into two: non-current assets and current assets. The non-current assets first item is fixed assets. Tangible assets mean we can able to see the assets like buildings, machinery, etc. Intangible assets means we cannot see the assets like trademark, goodwill, copyright, etc. Capital work in progress. Intangible assets under development. Non-current investment. Deferred tax assets. Long-term loans and advances. Other non-current assets. In the asset side, second major heading is current assets. Current investment, inventories, trade receivable, cash and cash equivalent, short-term loans and advances. Other current assets are shown in the current asset heading. The total is called asset side total. Both asset side total and equity side total should be tally. Statement of profit and loss account. The statement of profit and loss account will be disclosed the current year informations. That means income and expenditure. It will be classified into two: revenue as well as expenditure. The revenue side, revenue from operations, direct income. It's relating to the sales income, other income, indirect income. The total 1 and 2 will be called as the total revenue. Expenses. The first item is cost of goods sold. Cost of goods sold is nothing but opening stock plus purchase minus closing stock is called cost of goods sold. Cost of material consumed, cost of service provided. The second heading salary and wages of the employees and benefits of the employee. This is expenses relating to the employees like salary and commissions like etc. The next heading is financial cost. Financial cost is nothing but interest related expenses. Depreciation and amortization expenses. In this country, we want to show all the depreciation for the current year. Total expenses. Total expenses before expectational and extraordinary items and tax. Eighth point, extraordinary items. Ninth one, profit before tax. The seventh one minus eighth one. Tenth one, tax expenses. 11th one, profit and loss for the period of after tax. Assessment. Kindly answer the following question. The dash accounts represent the account of profit and loss transferred from the profit and loss account to the shareholders' equity. Second question. The dash account shows the dividends distribution to the shareholders during the accounting period. Third one. The dash account reflects the company's accumulated profit that have not been distributed as dividends.